Good afternoon, morning, and evening to all our participants. My name is Esben Poulsson. I'm the chairman of the International Chamber of Shipping, and I'm very happy to welcome you to this live Leadership Insight series. For the past 8 months or so, we've been running these regularly fortnightly sessions where we take a look at global issues impacting trade, economics, geopolitics, technological innovations, and the implications on our sector. Over the series, we've discussed and debated a wide range of issues, from crew change crisis and the impact of the pandemic on the global economy and trade. We've considered the technological changes sweeping across the sector and the implications for seafarer training, development, recruitment. We've reviewed geopolitical landscape and discuss changing risk and regulatory frameworks. Today, we will turn our attention to finance, and specifically financing shipping's transformation to zero-emission technologies, something we at ICS have termed the fourth propulsion revolution. While the international maritime organizations are, as we speak, discussing policy issues at this week's MEPC 76, we have brought together a group of speakers who have to deal with the reality of financing this transition. We have lots of questions to put to our panel, but please feel free to ask some more as the meeting progresses. You can use this on the question function on your control panel. Just before I introduce you to today's panel, I would like to thank our sponsors, American Bureau of Shipping, our series sponsors, and Ince & Co., who are sponsoring today's edition. Their generous support is very much appreciated. So on our panel today, we have Paul Taylor, Managing Director and Global Head of Shipping and Offshore at Societe Generale. Paul is also Vice Chairman of the Poseidon Principles. Welcome, Paul. Next, we have Abishek Pandey. Abishek is Managing Director, Global Head of Ship Financing at Standard Chartered Bank, and based in Singapore. And very welcome to you, Abishek. Our third member is Beatrice. Russ. Beatrice is Maritime, Aviation and Travel Partner at the law firm Ince & Co. Welcome to you, Beatrice. And finally, to complete, my good friend and colleague, ICS fellow board member, Svein Steimler, President and CEO of NYK Europe. Welcome, Svein. So, Paul, I'm going to start with you. You are a founding member of the much discussed and much heralded Poseidon Principles, a global framework for assessing and disclosing whether a bank's lending portfolios are in line with climate goals. You launched this in 2019, a very different environment to now. Can you tell us what were the ambitions for the Poseidon Principles, and what do you think has been the impact on the shipping sector thus far? Paul, please.
Thanks, Esben. Hello, everybody. Thank you. The Poseidon Principles, the starting point was very simple. It was that as banks, we are very, very well positioned to make an impact in relation to the vessels we finance and the impact they have on the environment. And the starting point was that as banks, there's about $450 billion of senior debt being made to the industry across about 70,000 commercial vessels, and therefore banks, as providers of capital, are in this very privileged position of being able to influence which ships are financed, and therefore which ships actually go on the water. So there's this power of coalition amongst financiers, and that together we can make a difference. So that was the starting point, and the aim was to support the IMO in its targets to reduce CO2 emissions by at least 50% through to 2050 on an absolute basis. So that if banks can align their portfolios in a way to support the IMO's targets, will go a long way to actually supporting the industry's ambitions regarding decarbonisation. So that was really the aim, and we focused purely on decarbonisation as opposed to any other social issues that we could have included at the time. Now, what we do and the aim of the Poseidon Principles is to measure and publicly report our carbon footprint of our portfolio. We measure the annual efficiency ratio, and we compare that with the trajectory that the IMO has set, and we report that publicly on an annual basis. So the idea is that it aids transparency, it aids accountability, but doesn't necessarily set targets. That was up to each individual signatory if they wanted to go beyond that particular point. Now, that's what the Poseidon Principles aim to do. So quite simple. The impact, what the impact has been, I think this is the huge bit. And I'd say that the impact has been huge. There's been great momentum since launching 2 years ago. We've got 27 signatories today, having 11 on launch, and we expect more to follow shortly, including, very importantly, Chinese leasing companies and eventually Korean banks and ECAs, and that's the gap we have today. But I'm confident we'll get there. Now, the Poseidon Principle is all about changing behaviour. It's not just about talking about it. It's about what banks will have to do differently going forwards once the annual results come in of their portfolio emissions. And we've just had the first year. I think it was a fairly predictable result. Most financial institutions were misaligned, not so much, but slightly misaligned, and that shows the need for an initiative like the Poseidon Principles. The second year of reporting, which is for 2020, will be this December. I think that's quite unpredictable because we'll have the results of a COVID year when some vessels may have been deployed in a slightly different way. So it's a little bit step by step. We're not expecting the impact of Poseidon Principles to be overnight. It's going to be over a period of years when we're going to start establishing trends in terms of in the results of each vessel, in the results of ship owners, which vessels perform in certain ways on certain routes, certain weather conditions, how long they spend in port. So that will become over time. So the impact will be step by step, and that's very important that we realise that, and we can't expect that we're going to see an overnight impact of the Poseidon Principles. However, it has started already. Certainly, I can speak for my own bank, Societe Generale, but I know other banks are doing the same. We're bringing climate risk into our credit process, and that is hugely important, and it's a one-way momentum. This is now as important as the credit risk, and it's part of the whole credit process that we look at when we're considering a vessel financing, or indeed refinancing. We'll be looking at the AER figures of vessels we're refinancing going forward. So that the impact has already started, but we have to accept that it will take a little bit of time to really fully unravel, and we'll see the full value of the Poseidon Principles. And I think it's actually good to see that in recent weeks I've seen some criticism of the Poseidon Principles. That's actually good to see, because when we launched 2 years ago, people were saying this is unrealistic, it's too ambitious, and now we're having the opposite thrown at us, that we haven't gone far enough. So I think that shows how far the industry has come and what a shift has taken place in the industry to date.
Thank you very much, Paul. We will come back to you with questions a bit later, I'm sure. But I would now like to turn to Abishek. Ship financing has undergone some significant changes over these past 5 years. Can you take us through the trends that you, as Standard Chartered, are seeing? And are there any lessons that we can learn from the progress of energy transition in other sectors, particularly? Abishek, please.
Thank you, Esben, and good morning, afternoon, and evening to everyone from across the globe who's joined us today. First of all, I think and hope that all of you are keeping safe and healthy. Well, that's a very pertinent question, Esben, as the shipping finance landscape has drastically changed over the last decade or so, specifically from the advent of the global financial crisis. Some of the salient points of this has been, Paul already alluded to, with respect to the reduction of the funding capacity at the overall ship finance level that is available to this industry. So to give you some picture, in 2008, the top 20 banks funded about 350 billion in this industry. In 2020, the top 20 banks funded only about $250 billion. Out of this, the European market share has also fallen drastically with the withdrawal of usual names like RBS, Commerzbank, Lloyds, and the list goes on, with few exiting completely like these, or significant others reducing their exposure to this industry significantly. In 2008, European banks accounted for 100% of the top 10 ship finance lenders, while in 2020, that number was about 50%. Lenders have had to moderate their overall approach given all this into lending into this industry with increasing regulations, not be it ESG regulations or ambitions, or be it the banking regulations like the Basel IV implications, ECB audits, or even the compliance requirements that are changing due to the changing geopolitical situation in the world. This has had a significant impact on the terms that are available today as compared to what they were available probably 10, 12 years ago. You talk about LTV profiles, tenors, all significantly reduced. What does it tell us? It tells us that there is a directional change towards diversification of the financial sources as the fleet has grown in the same decade where there has been a liquidity crunch from the banks. We have increased ECAs, alternative financing, and leasing structures, especially the Chinese leasing companies over the last 5 years that are trying to plug this gap. Now, all these long-term trends in ship lending are blending into some key themes today. Acceleration of green agenda and ESG overall is one of the themes. Poseidon Principles has gained additional signatories. 14 of the top 24 leading bank maritime portfolios are now signatories of Poseidon Principles. And after speaking probably for years with Paul and Mike, Standard Chartered also signed up a couple of months ago for it. There has also been an increase in owners issuing green bonds, loans, and sustainability-linked issuances, whereas the larger banks at the same time have continued to focus on the top-tier clients, creating a bit of polarization in the industry as per size and credit strength of the owners, which has made these banks reluctant to participate in the refinancing markets, and especially, again, zooming in on the mid-size and small owners, what we call in our industry as flight to quality. At the same point in time, the bank divestments, which are the banks that I just alluded to, are ongoing. The loan and portfolio sales are going on, and the banks are juggling the preparation towards the LIBOR transition. So all of this is happening at the same point in time. So this has significantly changed. With that as a backdrop to the second part of your question, lessons learned has been, I think, it is similar to the other sectors that we are seeing. We firmly believe that the energy transition and decarbonization of this industry is going to require a collaborative effort across all stakeholders of the industry. Now, teamwork is essential and everyone has to play their part. They will have to play their part in this. For the end users, charterers are now being more discerning about eco-friendly vessels tracking their Scope 3 emissions. On the supply side, yards are investing in R&D, working perhaps overtime to find that, ultimate, possibly the green ship, which is driven by the fuel of the future. Day-to-day operations, the technical and the commercial teams, along with the managers, are maintaining optimum speed to run the vessel to reduce carbon emissions. End of the life recycling standards have become more stringent than ever. So there is a change. It is very, very evident, and it is happening. And it's not that it is happening without the support of the financiers. Banks and other financiers are key to facilitate this transaction, and I think they understand this now. They fully understand that cutting carbon emissions in the shipping sector is crucial in curbing the worst effects of climate change that we are experiencing and ultimately heading to a net zero. Banks are incorporating actively green benefits incentives into their financing structures, in addition to managing the usual regulations and their risk return parameters in an extremely volatile industry. As a bank that specializes in financing world commerce and the enablers of global trade, we are supporting the maritime sector in the transition to net zero, and importantly, financing clients in emerging markets where this transition is a critical part of a client journey. I hope I was able to answer your question.
Thank you very much, Abishek. That was what you did indeed, and it was a very comprehensive response. And again, we will come back and I made a couple of notes to ask you about when we get through the initial statements from each participant. So now we go to Beatrice. We're a global industry with a global regulatory framework. What trends are you seeing in the regulatory and legal environment, and how can these facilitate shipping's decarbonization agenda going forward? Beatrice, please.
Yes, hello. to everyone. Good morning, good afternoon. I think on regulatory environments, the most important in our industry remains the international regulations. That is what comes out of the IMO. There's no question about it. We have seen, well, we not just represent the banks, but also the owners, and we have seen a shift, a massive shift, which was just before IMO 2020, and which keeps going on actually. Interestingly, Abishek was mentioning the cruise industry, and we have seen massive changes there of people looking towards greener, more energy conscious ships in order to comply with regulations, and not just with existing regulations, but with future regulations. I think there is an anticipation that this won't be the last change. There will be more changes coming, because all of us, you, me, everyone at a personal level, and companies, corporates at a larger level, we don't just always do the right thing. But if there's a regulation telling us what to do, or that if we don't comply, there will be consequences, that's where we then change our attitudes, where we move forward. The Poseidon principle is very helpful in this arena, but ultimately, I think you need you need regulations not just in one part of the industry. You need it industry-wide, which are consistently applied. We have seen it in the recycling sector, where we do get a lot of inquiries on green recycling now, and if you look, the regulations aren't uniform across the world, so you do get differently green or not green recycling. So I do think there is more change coming, definitely, in this. People are starting to anticipate it, and my impression is that we are reaching tipping point, that something will happen soon. Does that answer your question, Esben?
Yes, it does, but we will come back and I think delve a little more into the in some of the detail, not least what's going on right at the current time at the IMO. But thank you, Beatrice, for that. Svein, you and I have been in shipping for a hell of a long time, as we know. What do you think? What do you are the challenges as we navigate to this energy transition? Are you getting access to the financing you require within NYK Group to drive this decarbonization agenda? And what do you see are the main challenges, not just for yourselves, but for ship owners generally? Svein, please.
Esben, thank you for that in your question, and I'd like to thank you for inviting me to this panel. Good morning, good day, and good afternoon to everybody. And I would just like to follow Abishek's comments and hope you're all well in these very strange times we're in. Esben, you've given us each 6 minutes to comment. I've often said that we're all part of an extremely conservative business. We change late, we adopt late. We are a bunch of individualists working around the globe. I think you've heard me say this before. It took 4 decades for us to ratify a ballast water convention. 40 years it took us to change, or to get that in place. It proves that countries have their ideas, individual ship owners, ship operators have their ideas. And in this context, I would totally like to agree with Beatrice that the only way to get aligned is to get a set of rules and regulations which clearly tell us where to go. I was once accused of saying I don't like rules and regulations. On the contrary, I do, because that does give us an indication of where we should be going. I've also in the past said that I'm embarrassed to be a part of an industry which has done so little over so long to do the necessary changes. We are not the worst in the world as far as emissions are concerned. Look at the textile industry, which does far worse than us. But comparing one industry to another is not going to bring us anywhere. We need to look after ourselves and do what we can. What baffles me at times is that only a few years ago, we were all talking about NOx and SOx and particle emissions. Today is all about CO2. SOx and NOx and particles seems to have been forgotten completely. Back to your question, where do I see us going? I said I'm embarrassed to be part of an industry. On the other hand, I'm proud to be part of or a member of an organization who does more than talk. We do things. Only yesterday, you might have seen there was a press release, another 6+6 LNG vessels, which is part of our 50 LNG vessels which are planned to build. On the financing side, I cannot get into the details, but the Japanese government is highly focused on reducing CO2, and we are doing what we can to renew our fleet on the basis of the technology which currently is there. And this is where I get a little bit frustrated with my fellow colleagues around the world who say that, no, let's wait for something better. Let's wait for ammonia. Let's wait for hydrogen and sit back and do nothing. That is going to bring us nowhere. It's simply not viable, in my opinion. It's unserious, and it's a conservative way of looking at our industry, not wanting to do the necessary changes, making use of what is available today. In our program, we've clearly said that we will do something now. Once we get to, hopefully, towards the end of the 2020s, maybe there is something else on the cards, which we then will convert to and make use of. What have we seen as far as the banks are concerned? Of course, I respect the Poseidon principles. That is an action Paul referred to, which is a good initiative. Have we seen much thus far? No, we have not. I've been in conferences in the past where I said, show me the color of your money. So far, we have not seen much at all, but I'm pretty sure, but through a collaboration between banks, shipyards has been alluded to, operators, us as consumers, as Beatrice referred to, we need all to put our money's worth in and to make sure that we do what we can to clean up our industry. But I say again, and I'll probably end up by saying this today as well, we need to do more than just talk, we need to act. That's the only way of getting somewhere. And that leaves me with 1 minute and 10 seconds. Esben, I'll give the word back to you. Thank you.
Thank you very much, Svein, for that. And yeah, I think your points, as always, are very well made, and I think your views reflect those of many. Let me go back to Paul now. Poseidon principles, you have. I mean, you've indicated that it's a process. It is not going to happen overnight, and that is, of course, very understandable. And there's no doubt that the COVID crisis has really made the implementation, or if I can call it enforcement, or the use of these principles much more difficult, because it, for many obvious reasons. I mean, it is a very good point that you make, that the banks hold a certain power, and the more banks sign up to this, clearly the greater the impact will be. But in the short term, is it not so? I keep hearing that certain banks do not intend to sign up because they're just going to do their own thing, and they're going to have a nice little slice of the market all to themselves, for which they can probably charge more than a market rate. Bearing in mind, not least, that 1/3 of ship owners in this world are SMEs with typically a fleet between 15 and 20 ships, and these are considered very entrepreneurial enterprises, and they very often become big enterprises. They start small and they grow spectacularly. I can think of my many years in shipping of numerous companies that when I first knew them, had one ship and now are vast, great operators. These are the entrepreneurs, and these are the, they are significant. They're a significant portion of this market. But can you comment on this?
Yes, sure. Thanks, Esben. We can't force all banks to sign up. We have 27 today. In fact, if you look at the banks, we have most of the serious banks in shipping finance, apart from some of the Asian banks. But we have many of the serious banks, and it's going to lead to behavioural change. So, and the behavioural change is going to be that it's going to channel liquidity, channel capital to those ship owners who have high standards of maritime stewardship and who want to align themselves with industry goals. So therefore, it will take capital away from some of the other owners who decide that they haven't got an ESG policy going forwards. And I find that hard to believe, because I think every responsible ship owner, whether they're small or large, should take ESG incredibly seriously from now on. This isn't something that just applies to a certain part of the market. This is hugely important for everybody, and it will dictate who is able to source capital for vessel investments going forward. So that is actually a very key point to make. The Poseidon principles are just a start. They're a starting point. They have scope to expand. They were never, no one ever stood up and said, this is the way they're going to be for forever, and you're going to see an immediate impact and an immediate reaction from banks. Every bank, and it's important that if they can do so, can act in whichever the way they want to, and they can use the Poseidon principles in whichever way they want to run their business. We have to respect the competition rules. But I think what we're going to see, and we're going to see this after the second annual disclosure report of the Poseidon principles in December this year. This, as you know, will come shortly after COP26, which is bound to address shipping. And I think it's fair to assume that the IMO will have some new goals and new targets to look at post COP26, and Poseidon Principles Committee has already agreed in principle that we'll adjust our own ambitions, which probably means becoming more ambitious to be in line with the IMO's ambitions going forward. So it's true that the Poseidon Principles won't work for every ship owner, and I'm afraid that's just the way it is going forwards, but it's going to get even more ambitious going into the future. So they're not perfect, but I would say that let's not perfection get in the way of progress. The Poseidon Principles are here to stay, and I think they are the backbone of shipping finance going forwards. I think they're that important to the industry going forward.
Thank you, Paul. Yeah, interesting. Abishek, you mentioned that European banks between 2008 and now have in effect halved their involvement in shipping, and we've seen even in Singapore quite a number of European banks have ceased to provide ship financing in their local subsidiaries in Singapore and elsewhere. So my question would be, this being the case, we know that Chinese leasing has taken up quite a lot of this slack, if I can put it that way. But by implication, if there are fewer conventional players in ship financing, wouldn't it be logical to conclude that the cost of capital, the margins, etc., should be considerably higher, and the banks should do, those who remain as active in this segment will do better?
Thank you, Esben. Yes, very pertinent question. I'm delighted you asked this, actually, because risk reward is often not debated, and I guess it's not putting it on the ship owners, but it is to put it on everybody, that vastly knowing the volatility in this industry, I mean, the lurking question on the banking space has been, was it priced right? Was the KGKS structures priced right? With all the volatility that was there. Now, that has resulted, were they priced right and the terms were right, has resulted in HCOB going out, DNB, HCOB shrinking the portfolio, DNB shrinking the portfolio, NordLB leaving, Commerzbank leaving, Nordea, kind of reducing the portfolio. And all that in terms of an average change, if you see, and I like to see some numbers, it has been that in terms of US dollar billions, probably between 2013 and 2019, there was about 120 odd $billion, which retreated from this. At the same point in time, to answer your question, leasing companies came in. Leasing companies started coming in. So just to give you some kind of numbers, 2017, it was about the Chinese leasing companies portfolio was about $47 billion. In 2018, that went to 52.5. In 2019, it was almost $60 billion. New deals that they did in terms of investments were in 2017, 12, then 12.6. So a little bit of stagnancy between 2017, 2018, 2019 is $16 billion. So what we are trying to tell here is that there is a retreat which is very dominant. It's not that liquidity has gone out, means liquidity has not come in. It has come in, not as much, and it has come in at a higher price. Leasing structures, we all know, are priced differently. So what I'm trying to throw the light over here is that the market is regressing to the mean. I mean, it has been underpriced. The advent of the leasing companies and the advent of alternative financing shows us that there is elements of liquidity which can take this risk but need to price right. Now, traditional bank lending, if you look at between 0 to 4%, is, perhaps guys like me, Paul, ING, KFW, Nordea, MUFG, I mean, all of them will be in that range. But we are also, in terms of your matrix, on the lower side of the risk. Then you move into the middle. You've got some ship lessors which have come in. The Chinese leasing companies, Ocean Yields of the world, SFL is there, Costco does it, many yards do it. And then you go to the ultimate liquidity pocket, which can take any kind of risk that is being presented, mostly, and their returns are, the leasing. So from bank market of 0 to 4, you go to 4 to 7.5, 8 through the leasing vehicles. Then you go to, mid-teens through the funds like, Varde, there is Tufton, there's Australis, there's Northern Shipping Fund, Oak Hill, Alterna, you can name them, right? So to summarize my answer, the liquidity needed is lesser than which is available today, but it is available, and it is available at a price. Now the question is this the right price? Because we've seen it well before with all private equity, hedge funds, etc., coming in and burning themselves out. So that's where the market landscape is. Now, as a banker perspective, and Standard Chartered, for people, those who don't know, had played on both sides of the spectrum. So we do senior debt, which is between 0 to 3-4%. We also do, we go all hog. We buy assets and we bareboat them out. We do operating leases, which is complete, 100% investment risk. So when you've done both sides of it, I mean, you would probably come to a conclusion that essentially your lower side wasn't really balanced with the amount of risk that you take, but you still take it. So then where do you go? You tread towards better credits, because that is what I refer to as flight to quality. So first of all, the liquidity is less at a price that is available, which is an old price, so to say. It is reserved for a few companies, which is basically, very strong credit companies, large size companies, and mostly probably in Western part of the world. So that is the situation right now. So I think the shipping risk eventually will be priced right. It is already getting to nudge up, but unfortunately only on the small and medium size and emerging markets, and not really transcended. But it's a question of time that it'll regress to the mean.
No, that's very, very interesting, and I think this flight to quality one hears a lot amongst many banks. But does that, just as a quick question, does that then imply, or is a result of that SMEs not only have a very difficult time getting financing, but are going to have to really pay up for it, and are going to have to put up a higher percentage of equity than has been typical in the past.
Oh, absolutely. I mean, today it's not that you can't finance a 16-year-old vessel, or if you can't, if you've got four ship fleet or 20 ship fleet, you can't finance it. You just pay up, and your LTV ratios are much lower. So the price has gone up, and the advanced ratios have also come down. So I think it's a mix of both. I think it's important that everybody understands, and I think it's, again, I'm hinting it a bit to the ship owners, that, you know, let me put it very bluntly and very simply. When you make an investment in a ship, you are investing in a cyclical industry. And if I put it very simply, you want to take all the upside and you want to pass on the downside at LIBOR plus nothing to a lender. Lenders are getting smarter.
Yeah, indeed, it has been that way in the past for many years. That's true enough. Okay, Beatrice, let's go back to your comments about regulation. You quite correctly, in my view, said that there has been and is a shift going on. There's a trend towards the green, quite rightly and correctly, and that regulation is necessary. We, however, have a situation where developed nations believe that IMO is not going fast enough, and developing nations think it's going way too fast. And we've seen this even as we speak. MEPC 76, the debate is in full flow, to put it mildly. At a European level, we keep hearing that there's great impatience and that IMO is simply too slow, and it doesn't get the job done. But equally, as an industry, I think there's broad agreement that we need a global regulator in order to have a level playing field, to use that much overused term. But how do you, from your vantage point, how do you see this? Will the Europeans prevail in this debate? Will they go alone, or will they eventually close ranks and have the IMO as the global regulator? So over to you.
Yeah, can I just very quickly, before I come to the question, just add something to Abishek and Paul's points earlier. There was talk about particularly the leasing houses, and we do a lot of that. And for me, leasing is actually only another financing model. And behind the leasing houses, often you will have a bank. So if you do get the banks with Poseidon, it will trickle down through the leasing houses. I don't think it's actually, you know, quite as black and white as it might look at first glance. I do agree that there's a real issue for the sort of SME owners in the market to get capital at decent rates, but I think the competition from the leasing houses doesn't necessarily mean that the sort of green element of the Poseidon principles will be lost. Of course, you know, it will be preferable if they sign up, as Paul was saying, but because they do want to refinance themselves in the market, they're going to have to comply as well. So it sort of gets passed down. It's useful, you know, whatever, because it's there. Sorry, that was just a little add-on. So going back to your question, I don't know is the answer. I have been actually asking around. I used to work for the UK Export Credit Agency. And of course, the export credit agencies have been for a while very, very strong, particularly the European ones in the ESG sectors. They were amongst the first to adopt, you know, in-house principles and lending principles, and follow on big projects, not just shipping projects, but projects generally, environmental guidelines. So, and I do think, like you say, there is impatience here in Europe, but also there is fear that if they go it alone, there will be a race to the bottom. So My personal view is that they are probably going to address this at the international level because, you know, again, unless we have an international consensus, it won't be helpful. Although Svein was correct, or was it Paul who said, you know, don't let the perfect be the enemy of the good. So, you know, you can do a certain amount with regulations on a national level, and to an extent the Europeans probably these days are seen as an almost national level because it's a certain number of countries moving together forwards. But you will not see the large changes you need to see if you will, we will have if the IMO, well, legislates them, for want of a better word. I do see the IMO for our industry as a major legislator and the most important legislator we have. And the other national legislation sort of feed into this and hopefully will achieve together another change. Does that answer the question?
Thank you. Yes. Svein,
Sorry about the discourse.
Oh, you have answered. Thank you very much, Beatrice. Svein, I have two questions for you. First of all, what I just posed to Beatrice, your views on IMO, and then secondly, this question of the speed at which we're going. Are we going to end up with stranded assets? You know, this is a big question. And no one knows for sure. It's partly a crystal ball question, but just your views on that. And do you have any, you know, have you got some examples to hand?
Thanks, Esben. First of all, let me say, just emphasize the fact we are in an industry which is global. To have different rules and regulations in different parts of the world is going to make trade hopeless. That's very, very clear to me. The other point which is clear to me is that we are unfortunately in our industry dealing with a lot of ignorance at many, many levels. We as operators of ships, we are fully dependent on technological development. You saw it when we went from sail to steam to diesel, now from diesel to something else. And my view is, as I said in my opening comments, is that although we all want to get away from remove ourselves from the black molecules, that's very, very clear, but we are where we are today. And acknowledging the fact that the majority of ship owners around the world have not got the financial backbone to look into, call it development, technical development as such. Engine manufacturers do, large ship companies like NYK, which I do represent, does have the backbone and does spend money on looking into, as I mentioned previously, ammonia, hydrogen, electricity, these alternatives which are there today, depending on what type of shipping you're looking into, be it short sea, cross the channel, cross a fjord, or what have you. So we're looking into this, but the point I'm trying to make, and the point I wish to get across, is understand what is there today, what is required, and let's make sure that the rules and regulations are channeled through one organization which deals internationally. And I say again that once the rules and regulations are there, there is no doubt in my mind that the shipping industry will comply. My worry is, of course, with ignorance and different countries with different interests, different ship owners wanting to sit inside their comfortable circles related to conservatism, as I mentioned in my initial comments as well. We have an issue. But I feel a grave responsibility making sure that we use what technology is there so that we at least can start fulfilling the overall goals which have been set in the Paris Agreement. As to stranded assets, I don't believe there will be stranded assets. We, as you and I, us all, we are fully dependent on shipping. Shipping will be run in different shapes and forms. We will not find one. It'll be like a pie. with different pieces. Some will be the old ships, some will be LNG, some will be electricity, some will ultimately be hydrogen and ammonia. The point is that is dependent on development, and I don't for a minute believe that there will be stranded assets around, simply because we need to move towards this common goal of making sure that the overall CO2 reductions take place. Esben, does that answer your question?
Yes, I mean, but are you in fact saying then that an asset through conversion will conversion to new fuels will prevent assets being stranded? Is this part of it, or are you saying we just got to live with what we have until?
What I'm saying, Esben, is that this much depends on which segment of shipping you're in. As you well know, that you have different rules and regulations for different countries. You have 20-year barriers as far as older ships are concerned, certainly, you know, as far as the tankers are concerned. You have various rules and regulations. I alluded to the ballast water issue, which again is looked at differently, despite the convention being ratified differently. The shipping industry has, over decades, been seen to be extremely flexible. I'm not advocating to call it convert older vessels, because there's got to be economy in this. There's got to be economy, and you cannot spend millions and millions and millions of dollars to convert an older vessel. That will simply not happen. So if it's in that context, you're saying that maybe we end up with stranded vessels. Yes, but to me, when we build vessels today, they're usually built for a lifespan of, say, 20, 25 years, roughly. And I think this issue in itself will take care of itself if you look at the timeline between now and 2050. So I simply don't believe that stranded assets will be an issue henceforth.
Thank you. That is great, Svein. Thank you very much. We've talked a lot about ship financing, which is the purpose of this session, and a little bit about regulation. But as we move to zero emission technologies, we need also to invest in infrastructure as well as the ships. How do we catalyze this, and what are the roadblocks when governments are more concerned about COVID recovery than infrastructure investment? And actually this subject came up yesterday at a B20 session where, you know, some very interesting points were made on exactly this point, which is that investment in infrastructure will always pay, whereas investment in consumption will not always pay. So that was sort of the general drift of it. But could we end up with a two-tier world in relation to shipping and the attractiveness for investment? If I could just start with Paul, if you could make some comments on this, Paul, please.
Well, just addressing the very last comment on that question first. Having a two-tier shipping industry, I think there is a risk of a lack of investment in the shipping industry, and I've made this point on a number of webinars in the past. I'm concerned about the way the EU taxonomy is drafted, the way the climate bond initiative is drafted. Both fantastic initiatives with the right ambitions, the right objectives, but the way this is drafted is going to close the door on what we have today in shipping, and in fact it's going to close the door on the transition, and because they're focusing on the destination of zero carbon and not on the journey we have to undertake. And I think that could drive away investment from the shipping industry to other sectors, because investors want to invest in green industries. So it's not totally answering your question, but I think investment in assets, in infrastructure, not just ships, but across the whole value chain of shipping is under threat unless we start embracing this transition. And it's the one that Svein was alluding to in his last comments, how we can't be green overnight. So and then the second part of addressing your question is in terms of infrastructure, and it's a question of who's going to pay for it. And I don't think you can just look to the ship owners. You can't just look to the fuel suppliers. You can't just look to the ports or the banks. We need to be looking across the whole ecosystem, and thank goodness there is, I think at last, in this industry, which has been very individualistic for decades. Again, something Svein just mentioned to just now, and it's a winner takes all, what's in it for me attitude. We've now got this collaboration underway, which is fantastic, and so it's all a question of who's going to pay for it. And I think the answer is all those parties I've just mentioned, plus with the help of some very, very clear governance and regulation from the IMO and central governments is super key. But I'll leave the others to address the first part of the question.
Okay, Abishek, can we hear your views on this?
Sure. I mean, not repeating what Paul said, which I agree to. I mean, again, I would drive a little bit towards the numbers. I mean, if you look at the greenhouse gas emissions just 3 years ago, 2017, I mean, of the total global CO2 emissions in 2017, transportation had 24%. You had power generation with 41%, and you had manufacturing and industrial processes with about 24%. So you could say about 65% of the CO2 was being emitted by power generation and manufacturing and industrial processes. So, you know, this transition is coming in waves, if I was to say. Wave one was targeted on oil and gas, metal and mining kind of industries, which was addressing the larger pie, which I explained. Now, we are the second largest pie in transportation. Now, the beauty is that within transportation of 24% contribution, international shipping is only about 10%. The rest of it is aviation, which is about 12%. Then you've got rail, which is about 1%. So if you ask me, I think in terms of an investment wave as well, we are wave two. And I guess, you know, then when you zoom in into an international shipping itself, there are two types that we are grappling with if we oversimplify everything. One is the technology, one is the fuel. And then, you know, with both comes the infrastructure. Infrastructure more with respect to the fuel. How will you bunker? How will you have ports? How will you have barges doing it, etc. Now, is the technology there? I mean, I completely loved what Svein said initially. You know, I mean, you can't just wait it out. It is there. It's not perfect. It is LNG, LPG, whatever you want to call it. So let's break it down in a decade to 2030, right? Do you have something to transition you till there? Yes, of course you do. Does it work? It's working. I mean, it's not rocket science. It's already working. I mean, I would say, somebody said to me yesterday, a very seasoned guy in shipping, you need to be a very brave ship owner, Abishek, if you want to go and order something which is an orthodox design. Yeah, I have a huge respect for that gentleman, and he said it so well. And I guess, you know, I was not able to articulate as a banker, but I guess you really need to be. You really need to be very brave to do it. I don't think I can do it going forward in next 1.5 years. So I think that we are a part of second wave, and I guess the investments will come. They will come. Now, let me just break down the investments for you. I mean, it is basically, you know, anywhere you read it, it's about, you know, offshore, onshore investments needed anywhere between 1 trillion to 1.9 trillion, and you will see all those kind of numbers. So that investment is quantified. It's coming. It either come through bank, or through private-public partnerships, etc. But it will eventually flow down to these things, and there is going to be a liquidity gap with respect to the risk that you have in terms of catching up. I again go back to the risk return, old banking thinking, right? So there are pockets who are taking this risk. They are in wave two. There are lots of funds I can mention to you. You know, if you hear it, there are private debt funds who are looking at it. There are impact funds who are looking at it. There are sovereign wealth funds investing in platforms that are offering leasing solutions. I mean, you've heard the press announcement of Purist Marine, Neptune, ISIM. So ISMI. So if you look at it, they will not be traditional liquidity that is going to there. And I guess that is where we need to stand aside a little bit and start crying foul that the banks are not helping, the governments are not helping, and you know, we don't have funds to do it. You do it at your own peril. So I guess it will be coming. It will be in wave two once, you know, these larger contributors, so to say, are on track. It will come mainly into infrastructure, because I feel technology, like Svein, I completely agree. I mean, LPG, LNG, the transition technology is there. Something is there to you know, work with. It is also well funded, if I may say. So I guess, you know, dual technology vessels are being funded, and then eventually you've got diverse pockets of liquidity which will take new technology risk at that price to give it to you, either it's equipment, infrastructure, or the ship.
Interesting. Beatrice, if I could just change the subject and ask you a specific question that I have, and people would like to hear your views on this. How much is shipping being changed by ESG requirements? I mean, I think a lot of people didn't really know what ESG was until perhaps maybe a year or two ago, but it seems to really have taken hold, and of course, particularly so in the larger public companies where, you know, the demands of customers are great. But if I could hear your comments on that, and then it'll be soon time to wrap up.
We have definitely seen an uptake of it creeping into the contractual frameworks where you wouldn't necessarily expect it, like charter parties. Very important, you know, as far as financing goes, charter parties are probably one of the cornerstones, but also the whole loan documentation. Paul and Abishek's Poseidon principles do creep in, which is positive because it moves in that direction. You mentioned the sort of large public companies, they're at the forefront of this, but I wouldn't say that the smaller owners or medium-sized owners aren't just as interested, because they're, you know, they're not stupid, they know it's coming, so they're all looking at it, although they prefer to take the wait and see attitude for the moment because they can't afford it. So if there was more investment available, I'm sure they would be, and it would change shipping even more. And particularly the contractual frameworks which are there. I think what hasn't happened yet, and which goes probably to your previous questions on what happened with the pandemic, because I think that's put a little bit of a brake on some of the things. I think there is movement in the market towards finding all sorts of different financing forms. And I think we're seeing that now with the ongoing pandemic, and some companies, you know, for example, the cruise companies, but also some of the larger oil and gas companies needing different financing forms and looking at alternative ways of pulling together different types of resources, bonds, traditional financing, leasing financing, and diversifying not just their portfolio, but in respect of individual projects. And I think all of this, you know, situation we're in currently is quite precarious for a lot of owners. And yes, it probably changes things at an accelerated rate. And ESG, if we all play our part, can be part of this change, which is ongoing in the industry. And the pandemic can work, well, for the good in a way, rather than just being the brake it's been currently. Does that help?
Yes, thank you very much. Svein, we have only a couple of minutes left. If you would like to, an owner's perspective, your views on ESG and how it's looked upon within your group, a very short, maybe 1 minute, and then I'll try and make some summary remarks.
Thank you, Esben. There can be no doubt about it, folks, that this is important for us. As I also said initially, this is one of our call it milestones in NYK for sure, where we are spending lots of money. We're doing what we can do with known technology, as I mentioned, and we will then move on to something else if something else comes. In CLNG, where I'm also a member, I usually say that LNG is a bridge into something else. Paul will know this because he's on the board there with myself as well. It's important. We need to go. We need to make sure that we clean up our industry, and everybody needs to play their part. But more so, and you know this only too well, Esben, that it's important for us to explain this to you and I in the public, because the public needs to understand. We are under attack because we are seen as being rich and dirty. You've heard me say this many, many times, and we need to change it. And I know ICS is doing a phenomenal job there in that context, simply because the understanding and the need for shipping is there today. It's going to be there for the future. because 90% of what we surround ourselves with at any time has come in on a ship. That message needs to come across. But in that context, we need to clean up our act. Esben, thank you.
Thank you very much, Svein, and thank you very much to Paul, to Beatrice, and to Abishek and Svein. Thank you so much for a very, very interesting session. I think we've learned a lot. The waves that Abishek referred to, climate risk is a credit process, as Paul mentioned. Beatrice made a very interesting points about regulation and the need thereof. And Svein gave, as usual, an excellent ship owner's perspective from his point of view. So thank you very, very much indeed. Good morning, good afternoon, evening to you, and big thanks and to all of our participants. Thank you.
Thank you very much.
Thank you.
Thank you.